really good news kind of across the board for NVIDIA. The AI trade still very much in place at this point. And one of the big things is talking about what comes off of the AI trade is electricity, infrastructure build out, and most importantly, water. Here's what you need to know before the bell this morning. So yesterday in the daily market commentary, again, it's one of those reports you can subscribe to at the website, realinvestmentadvice.com, absolutely free, comes to you every morning at 7:30. We went over the outcome for NVIDIA and explained why we reduced our holdings in NVIDIA before the earnings announcement. And so all we did was we've owned NVIDIA for a long time. We buy and sell. When it gets really overbought, we trim it off a little bit. When it pulls back, we buy some back. And that's what happened back in April. The stock declined. And during this decline back in April, we added to our position. So all we did was this rally since April has been very nice. So we just removed what we just added. So we just took the profits and rebalanced our portfolio position back to target weight. And the reason for that was that what we've seen here this earnings season is that if companies come out and have really stellar earnings reports, they're not rewarded that much. But if they miss, or even if their guidance is just in line, like Palo Alto Networks as an example, the stock will be down 10 or 20% for the day. And so again, when we laid out, and this is what we did in the daily market commentary, we laid out the risk range of NVIDIA. We said, okay, if they come out with just inline earnings, meet their estimates, which were already very elevated to start with, but if they come out with that, the risk of that is about a 20% decline in the stock, and that would happen very quickly, take us back to support. So we had about a 20% decline priced into the market. We said if everything goes great and they announce super earnings, the upside of that is about 10%. So you had a risk reward range that was almost 2 to 1 in that environment, which was why Mike and I decided to trim back that position to target weight, because it wasn't a function of whether or not we thought they would do well in earnings, because the trend of AI and what's happening suggested that their report would be fine. The risk was the guidance. Did they come out and say, hey, things are slowing down a bit, somebody's, maybe people aren't buying as much of these GPUs? That wasn't the case. Apple, Microsoft, Google, and Amazon, those 4 companies made up 40% of the sales of the GPUs for NVIDIA during the last quarter. And the other remainder of that went to companies like Elon Musk's xAI, his new development, CrossWeave, who's building out data centers, others. So again, there's a lot of demand. Sales were up 426% annualized. So again, just, they're blowing it out on all cylinders right now. Stock is going to be up about 7% this morning. So right within our target range, because we had said that the markets it could be up 10%. We're about 7% this morning, last time I checked. Also, the stock is going to do a 10-for-1 stock split. So this $1,000 stock price is going to drop back down towards 100. Which will make it easier for more investors to get into the stock. So again, really good news kind of across the board for NVIDIA. The AI trade still very much in place at this point. And one of the big things, we've got an article coming out on this next week, is talking about what comes off of the AI trade is electricity, infrastructure build out, and most importantly, water, because it takes a tremendous amount of water to cool AI data centers. So that's some stuff we'll be looking at for you down the road. But that's what you need to know before the bell this morning.